New banking rule could freeze your Social Security deposit. Here's what you must know now. If you receive Social Security, SSI, or SSDI, stop what you're doing and pay attention. A major new banking rule is quietly rolling out across the United States, and millions of seniors have no idea it could directly impact how and when their benefits hit their bank account. We're talking about your monthly income, the money you depend on for groceries, medications, rent, and everyday bills. This isn't a rumor. This isn't political noise. This is a real policy shift that financial experts are calling one of the biggest changes to hit seniors' bank accounts in years. Could your deposit be delayed? Could your account be frozen without warning? Could new verification requirements lock you out of your own money? These are the questions every American over 60 needs answered today, not tomorrow.
I'm going to break it all down in plain, simple English. No confusing bank talk, no government jargon. Just the facts you need to protect your benefits and your peace of mind. Let's get into it. How we got here. The background. You need to understand for decades, the American banking system has operated with a set of rules designed to protect consumers, including seniors who rely on fixed income like Social Security, SSI and SSDI. These protections were put in place after hard lessons learned from financial crises, bank failures, and cases where ordinary people lost access to their money through no fault of their own. The system was never perfect, but it had guardrails. And for most people receiving federal benefits, those guardrails meant that their monthly deposit would show up like clockwork, land safely in their account, and be available to spend without any drama. But here's what has changed. Over the past year or so, there have been a series of regulatory discussions happening at the federal level, inside agencies like the Federal Deposit Insurance Corporation, FDIC, the Consumer Financial Protection Bureau, CFPB, and the Office of the Comptroller of the Currency. These are the agencies that oversee how banks operate in this country, and the conversations they've been having are directly connected to how banks handle government benefit deposits, how accounts are verified, and what happens when a bank flags an account for review. Most people never hear about these conversations because they happen in regulatory documents and policy meetings that most of us never see. But the effects trickle all the way down to your checking account. Dasar. What exactly is this new rule, and why does it matter to you? In plain English, the rule relates to something called account verification and fraud prevention protocols. Banks have been under enormous pressure from the federal government to crack down on fraud in the benefit system. There have been billions of dollars lost to fraudulent Social Security claims, identity theft targeting seniors, and fake accounts set up to intercept benefit payments. And while that is absolutely a real problem that needs to be addressed, the way some banks are choosing to respond to that pressure is creating serious complications for real legitimate seniors who have been receiving their benefits for years. Here's how it works in practice. When a bank receives a large or unusual deposit into an account, or when an account shows patterns that their automated systems flag as unusual, the bank has the right, and under the new guidance, in some cases the obligation, to hold that deposit, review the account, and in some situations freeze access until the review is complete. Now, for most people, this might sound like a minor inconvenience. But for a senior who is living on Social Security and counting on that deposit to pay rent on the first of the month, a hold of even 3 to 5 business days can be devastating. We're talking about missing rent payments, not being able to buy groceries, not being able to pick up prescriptions. This is not a small thing. And it gets more complicated than that. The new guidance also touches on something called Know Your Customer requirements, which banks are already required to follow, but which are being expanded and updated. Under these requirements, banks must verify the identity of their customers and ensure that the accounts they're operating are being used legitimately. For most younger customers who regularly update their information, use banking apps, and respond quickly to emails or text messages from their bank, this process is largely invisible. But for seniors, especially those who don't use smartphones, who may have limited internet access, or who simply aren't checking their email every day, a verification request from the bank can go unnoticed until it becomes a problem. What this looks like in real life. Let me paint you a picture of what this can look like in real life. Imagine a 74-year-old woman named Dorothy. She's lived in the same apartment for 15 years. She's had the same checking account at the same bank for over 20 years. Every month, her Social Security check lands in that account on the second Wednesday of the month. She uses it to pay her bills, buy her groceries, and cover her medications. One month, her bank sends her an email asking her to verify her identity as part of a routine compliance update. Dorothy doesn't check her email very often. She misses the message. 2 weeks later, her account is placed under a temporary review hold. Her Social Security deposit comes in, but she can't access the funds while the review is pending. She goes to the bank, and she's told she needs to bring in 2 forms of identification and proof of her current address to resolve the issue. It gets resolved eventually, but not before she missed a bill payment and went several days without access to her money. That scenario is happening to real people right now across this country. What about federal protections for Social Security deposits? Now, you might be wondering, isn't there a federal law that protects Social Security deposits from being frozen or withheld? And the answer is yes, there is. Federal law does provide important protections for Social Security and other federal benefit payments deposited electronically into a bank account. Specifically, when a bank receives a garnishment order, meaning someone is trying to legally collect a debt from your account, the bank is required to review the account and protect a certain amount of funds that represent federal benefit payments from being garnished. That protection is real, and it matters. However, and this is a critical point, the protection applies specifically to garnishment situations. It does not prevent a bank from placing a hold on your account for compliance or identity verification reasons. Those are treated as separate matters under banking law. This distinction is incredibly important, and it's one that many seniors, and even some financial advisors, are not fully aware of. So let's be very clear about it. If someone is trying to take money out of your Social Security benefits to pay a debt, in most cases that is illegal, and the bank is required to protect those funds. But if the bank itself has flagged your account for a compliance review, or if there's a suspected fraud issue on the account, the bank has legal authority to restrict access while the investigation is underway. The key is knowing your rights in each situation, and knowing exactly what to say and do if this ever happens to you. Special concerns for SSI and SSDI recipients. Let's talk for a minute about SSI, Supplemental Security Income. Because the situation for SSI recipients is a little different, and in some ways even more fragile. SSI is a needs-based program, which means it's specifically designed for individuals who have very limited income and very limited resources. The monthly payment amounts are lower than Social Security retirement, or SSDI payments, and the recipients are often among the most financially vulnerable Americans. For an SSI recipient, losing access to their benefits, even for a few days, is not just an inconvenience. It can be a genuine crisis. And yet SSI recipients face some of the same account verification challenges as everyone else. Sometimes more so because they may be less likely to have established credit histories, may be more likely to live in shared housing situations that complicate address verification, and may have more limited access to the kinds of documentation that banks request during a compliance review. SSDI, Social Security Disability Insurance, presents its own unique set of challenges in this new banking environment. SSDI recipients are individuals who have paid into the Social Security system through their work history, but are unable to work due to a qualifying disability. Many SSDI recipients are managing serious health conditions that affect their ability to respond quickly to bank inquiries, travel to a branch location, or navigate complicated verification processes. Some are dealing with cognitive impairments, mobility issues, or mental health conditions that make these kinds of bureaucratic tasks genuinely difficult. And the new banking guidelines, because they were designed primarily with fraud prevention in mind, don't always account for the very real barriers that disabled individuals face when trying to satisfy identity verification requirements. SSI, what you can do to protect yourself right now. So, what can you do to protect yourself? That's the part I really want to spend time on, because knowing the problem exists is only half the battle. The other half is taking concrete steps to make sure that you're as protected as possible, and that if something does happen with your account, you know exactly how to handle it. Let's go through this carefully, because I want you to walk away from this feeling informed and empowered, not scared. Step 1. Update your contact information. The first and most important thing you can do is make sure that your bank has your current, correct contact information on file. This sounds incredibly simple, but you'd be surprised how many people have not updated their phone number or email address with their bank in years. Banks are increasingly using automated systems to send compliance and verification notices. And if those notices are going to an old phone number or an email account you no longer use, you may never see them until your account is already in review. So this week, not next week, this week, I want you to call your bank or visit your local branch and confirm that they have your current phone number, your current mailing address. If you use email, your current email address. This one simple step can prevent a lot of problems. Step 2. Understand your bank's direct deposit policies. The second thing I want you to do is understand what direct deposit protections already exist for your benefits. Go to your bank and ask a customer service representative to explain what their policy is for holding or reviewing direct deposits from the Social Security Administration. Ask them specifically, what triggers a review? How long can a review last? What would you need to do to resolve a hold if one were placed on your account? Write down what they tell you. Get the name of the representative you spoke with. Having this information ahead of time means you're not scrambling to figure it out in the middle of a crisis. Step 3. Consider a small emergency fund. Third, consider whether it makes sense to have a small emergency fund in a separate account, even just a few $100s, that's not tied to your primary benefit deposit account. I know that's easier said than done for many seniors on a fixed income, and I'm not suggesting this as a requirement. But even a small cushion can give you breathing room if your primary account is ever placed on hold. This could be a basic savings account at the same bank, a credit union account, or even a prepaid debit card that you keep funded for emergencies. Step 4. Keep important phone numbers accessible. Fourth, and this one is very important, know the direct phone numbers for the Social Security Administration and your bank's customer service line, and keep them somewhere easy to find. If there's ever a problem with your deposit, time matters. The sooner you can get on the phone with the right people, the sooner the problem can be resolved. The Social Security Administration's main phone number is 1-800-772-1213. They're available Monday through Friday from 8 a.m. to 7 p.m. If you have a problem with your deposit, they can tell you whether the payment was sent and when, which is crucial information for any conversation you need to have with your bank. Secretary. Step 5. Add an authorized contact. Fifth, if you have a family member or trusted friend who helps you manage your finances, consider adding them as an authorized contact on your bank account. Not necessarily as a joint account holder, but as someone the bank is allowed to speak with on your behalf. This can make it much easier to resolve issues quickly, especially if your own ability to communicate with the bank is limited by health, mobility, or other factors. What about switching banks? Now, I want to talk about something that has come up a lot in conversations I've had with seniors about this topic, and that's the question of whether to switch banks. Some people, after learning about these new compliance rules, have considered moving their benefits deposit to a different bank or credit union where they feel they might be treated better. And I want to address this thoughtfully, because it's not a decision to make lightly. Switching the bank account where your Social Security or SSDI is deposited requires you to update your direct deposit information with the Social Security Administration, which takes 1 to 2 payment cycles to take effect. During that transition period, it's very important that your old account remains open so that payments don't get lost. If you do decide to switch, call the Social Security Administration before you close your old account. And make absolutely sure the new account is set up and confirmed before you make any changes. Credit unions are worth a mention here, because many seniors have found that credit unions offer a more personal, community-oriented banking experience that's sometimes more accommodating during compliance reviews. Credit unions are member-owned financial cooperatives, and they tend to have more flexibility in how they handle customer service situations. They're also federally insured up to $250,000 through the BOAS, National Credit Union Administration, just as banks are insured through the FDIC. If you have a credit union in your area that you've been curious about, it may be worth a visit to ask about their policies for handling federal benefit deposits. Watch out for scams. I also want to spend a moment talking about something that's closely related to this banking rule issue, and that's the rise of financial scams targeting seniors. Unfortunately, anytime there's confusion or uncertainty in the financial system, scammers take notice. And right now, there are people out there who are specifically using the news about banking changes and benefit rule updates to target seniors with fraudulent phone calls, emails, and text messages. The most common version of this scam goes something like this. You receive a call from someone claiming to be from your bank or from the Social Security Administration, telling you that your account has been flagged and that your benefits may be interrupted unless you take immediate action. They then ask you to verify your Social Security number, your bank account number, or other personal information over the phone. Please hear me clearly on this. Neither the Social Security Administration nor any legitimate bank will ever call you unsolicited and ask you to provide your Social Security number or bank account information over the phone. If you receive a call like this, hang up immediately. Then call the Social Security Administration or your bank directly, using the phone numbers you already have on file, not a number the caller gives you, and report what happened. Final thoughts. As we come toward the end of this guide, I want to summarize the key things we've covered today so you can carry them with you. We talked about the new banking compliance rules and how they relate to fraud prevention measures that can sometimes result in holds or delays on federal benefit deposits. We talked about the difference between garnishment protections, which are strong, and compliance hold policies, which are more complicated. We talked about the specific challenges facing SSI and SSDI recipients. We went through practical steps you can take right now to protect yourself. We talked about scams, about FDIC insurance, and about the resources available to you. Most importantly, I want to leave you with this. You are not helpless in this situation. Yes, the banking system is complicated. Yes, the rules are changing in ways that are not always communicated clearly to the people most affected by them. But you have rights, you have resources, and you have advocates. The more informed you are, the better positioned you are to protect your benefits and your financial security. And that's exactly why information like this exists, because you deserve to have it delivered in a way that's clear, honest, and actually useful. Stay safe, stay informed, and take good care of yourself.